Welcome to Real Vision Crypto. I'm Ash Bennington. I'm joined today by Takaaki Kato, Executive Director and Head of Sales and Trading at BitFlyer, the largest crypto exchange in Japan. Today, we talk about digital assets in the context of Japan and broader Asia. Taka, welcome to Real Vision.
Thank you very much for having me.
It's a pleasure to have you here today. Let's get started talking a little bit about your background. You had a long and distinguished career in traditional finance before you made the jump into digital assets.
Sure. So after graduating college, I grew up in the U.S. I moved out to Japan, initially just to maybe for a 2-3 year stint, kind of get in touch with my roots, but I ended up staying a lot longer. So I started off my career at Goldman Sachs in Tokyo. And the progression of, my career was that I started off at a equity sales role. And the interesting part of that was that I had the opportunity to spend a lot of time with a lot of different types of investors as they came through Japan. And so the corporate culture in Japan was one that really wasn't that welcoming to shareholders at the time, but a lot of people wanted to come to Japan to speak directly to management to try to get a better sense of what's going on the ground. So I handled all the logistics and the translation for a lot of investors coming into Japan, and that gave me the opportunity to meet with some people such as Steve Mandel or a lot of people of the Tiger Complex back then in the 90s. And really get to spend a lot of time with them to see how they dissect companies and analyze them. So that was a great learning experience. From that role, I moved to the execution side to get closer to the markets. So I joined the futures and execution desk. And this was these days, there were no algos. So a lot of execution was done manually. So I literally had to stare at the tape and press buttons to execute trades. In Nikkei futures and options, for example. And that was, really post the whole Nick Leeson issues in Japan, or in Asia in general. So it was a very interesting period.
We should say Nick Leeson was a trader at Barron's Bank who ultimately played a significant role in actually bankrupting Barron's. Owen Wilson famously played a great film, if you're interested for the backstory.
I have seen it, and that was it was a very well done movie, I thought, and it gave me an opportunity to interact and see how some of the best macro traders traded. So, Goldman obviously had a very close ties with some of the biggest macro investors of the time, and back then, a lot of stuff was done over voice. So you could actually hear and see how some of these macro traders traded, and stylistically. Again, I'd say some of the biggest names that you might see on CNBC and so on, when they're executing and you can see the styles, some of these guys, it's very clear. They're very good at the turn. They kind of come in at the right time, push the market, and then the whole market reacts.
Hey, Taka, for people who don't know what it's like to sit on a trading desk, explain what that means.
Sitting on a trading desk. Just imagine rows of computers, and you've got screens which basically show mainly what we call baikais, sets of offers, sets of bids, and literally that's what a real market is. And you watch the bids and the offers obviously hit each other, it's the very basics of how a market works. Is that there is this whole notion of supply demand, fear and greed, panic, and you can see all that in motion, which is now all automated. But back then, you can actually see it in kind of real time on the screens as the ticks happen. So I'm not sure if that's a great explanation of it, but it's quite different than what I think most people imagine how markets work.
By the way, I should say it's actually Ewan McGregor and not Owen Wilson, and it's called Rogue Trader, the Barron's, the Barron's film. So interesting enough, you've spent all of this time essentially gathering all of this experience, what it means to execute trades, thinking about markets from that context. How do you get interested in the crypto side?
The first time I came by it was, I believe it was either 2012 or 13, but the FT ran a set of articles. I think it might have been in Alphaville, but talking about Bitcoin. And after reading that, I started to do a bit of work on it and take a look at it. But unfortunately, I came to the conclusion that the risks of China taking over and some of the sort of early concerns of hacking, etc., were too great for me to put any significant amount of money. Again, I should have put a bit of speculative money. Had literally talked to my wife and been able to get her on board with putting some savings into it. So. But unfortunately, didn't pull the trigger, and then so I kind of missed the whole first leg of the rally, 2017. But what really got me interested was in 2020. You may recall that the IMF, the BIS, et cetera, all put out a bunch of papers in September, October that year. And so I kind of went through that, and that's what really kind of made things click, because I was looking into it, but I couldn't find something that kind of get me over the line. But then when I saw the framework of the financial system that was being laid out in those papers, the time frame, et cetera, it clicked that the world was about to change. So fortunately, as I started to get quite interested and bullish, and the logic behind it was slightly different, is that the framework that was being built, the bottom line conclusion was that it was going to take years to put it together. Bitcoin was going to have an open window to run before that framework was put in place for the CBDC. So with that in mind, that was, to me, the catalyst for the breakout in 2020. So as things were breaking out, I literally was buying the breakout. And this was a year after the gold breakout. Again, gold had a cap at 1360 for so long. And as soon as it broke that, it just obviously ran all the way to 2000. Bitcoin felt the same way at that point in time. So that's when I just started buying it for myself. And then I joined the industry the following year. But I was in discussions for the right role from that point.
So how did you make the decision to go to BitFlyer, as we said, the largest cryptocurrency exchange in Japan?
So BitFlyer was started in 2014 by an ex-Goldman colleague. And he had reached out to me in early 2020 to see if I'd be interested. And initially I said, listen, I'll think about it. But I didn't quite grasp the opportunity, didn't quite know enough about it to really say I'd make a career change from traditional finance to crypto. But as I kind of put some work into it and looked into it, the markets were going to develop, I thought, in a way that was similar to traditional finance. And that's definitely what we're seeing today. And a lot of the concepts and ideas were very similar. So again, going back to my background a bit, from pure execution to then sort of focusing on derivatives and then macro. And then over time, I joined the macro sales team, which is sort of where I ran into Raul initially. So we kind of had a similar background. That's when really, when you think of it, and I guess the way he would as well, and I did, it was like, this is going to happen, right? And this is going to be a major trend. And it didn't matter really how regulations or any framework was going to be built. This thing was going to be fairly unstoppable, it seemed. So I was like, okay, listen, if you can't beat them, join them. And I just made the jump.
So with all of that said, Taka, give us the framework. How do you think about crypto markets in Japan specifically? I know that a lot of people here in the United States understand the importance of Asia and digital asset markets, but they don't understand some of the particulars. Tell us about the crypto markets in Japan right now.
Okay, so take a step back. Obviously, Japan was the biggest crypto market or Bitcoin market in the world back in 2017. And BitFlyer at that point was the biggest exchange. The flows were dominated by retail. So on the exchange side, our flows were roughly 70% retail, so 70 plus. So literally, it was very much dominated by retail, and they were trading in very large size and with leverage. And I think that's key. The concept of leverage in Asia, I think, is very powerful, which is what makes the flows so much bigger in the perpetual swap market. in this region. It's partly regulatory, but I think it's also the nature of the investor base.
By the way, tell us about those perpetual swaps, because I think a lot of Americans don't really understand that product.
We have two products as well, BitFlyer, which is both a perpetual type product as well as a future. Having come from TradFi, that you're at least in equities, you're used to both S&P and Nikkei and everything to have a futures product with a fixed expiry, and a convergence mechanism that's basically on a 3-month time frame, usually quarterly. Now, I guess what has happened is that the retail-driven product, retail aren't really in favor of kind of going through the whole roll process of saying on a quarterly futures product that you need to, roll your product and maintain the exposure. Whereas on a perpetual,
by the way, for people who may not know, what you're talking about is the futures expiry process, where you have to essentially come back into the product on a quarterly basis to continue your exposure to it. So it has a fixed expiry date, and rolling that is essentially buying into the next contract.
The futures positions require a bit more maintenance, if you will, and you need to ensure that you roll the product or maintain that exposure. And go through the process of that while watching the economics of doing that. Whereas on a perpetual product, many of the convergence mechanisms, which is basically the notion that the derivative product and the spot product have to have some correlation and are tied together. But on a perpetual in that market, there's often a daily or a certain hourly cycle, or there's some other way to make sure that the spread between the two doesn't grow to anything that's untenable.
And what's that mechanism for the perpetuals?
In the perpetual swap, we have a fairly unique product, which uses something called an SFD, a swap for differences, which basically is a bit of when it goes too far in one direction or the other, there's a bit of a penalty applied to anyone trying to push it even further away from the anchor product or the Bitcoin price. But many of our competitors have products which are much faster. And so on a daily cycle, either 8 hours or 24 hours, even sometimes on an hourly basis, the product will converge. So what happens at a 3-month time frame in a futures product, let's say on a quarterly expiry, happens on a daily window. So again, this goes to the notion of really the derivative product, and especially in crypto, and why it's so fast and aggressive, is a function, I think, of the leverage that is allowed in Asia. And again, Japan has changed significantly on that front. But again, in Asia, there's a fair amount of leverage still in the market. The liquidation process, which basically forces positions that are losing to be liquidated and automatically at a very fast rate. And really, I think because the markets are disparate, they're I'm not sure what the right word here is that the markets, there's so many different ones that aren't necessarily connected, and the arbitrage mechanisms that keep them in line can't react as fast as the actual underlying product. So you have these big dislocations between markets. And so the fact that you have many different markets, you have a lot of leverage, and you have a liquidation process leads to these very fast, aggressive, and derivative markets in this region, mainly led by exchanges that are historically been China-based. But Japan has also been a big derivatives market historically.
Taka, this is such incredibly important information. I think many investors here in the US see the price gyrations in Asia. They don't quite understand what's causing them. This is really the underlying mechanism for that. Let me just ask, for people who may be wondering, what is the advantage, or why is it that investors in Asia are so keen to have this synthetic exposure through derivatives rather than just buying the underlying asset, perhaps with leverage?
I think a large part, and this is true in Japan, is that the notion of trading versus investing, I think, is quite different. I think the safety, sorry, I guess the notion of digital gold, the safe haven asset, I think isn't as pronounced here in Asia as I would believe is true in the other parts of the world, the U.S. and Europe, especially. So, or even in emerging markets, right? So, in Asia, it is a trading tool for the most part. It's kind of grown up that way, and that notion still sticks. I think that's starting to change, and I think inflation is a big part of why that has and is going to change. But it's a trading tool first and foremost. That's similar to where FX is or has been historically. So there's the whole notion of Mrs. Watanabe in Japan being a big retail trader, taking, moving things like dollar yen, Turkish lira yen, Brazilian real yen back in the previous cycle of 2007, 8. So again, the newest one, it was crypto in 2017. What is interesting, though, is that it is really still a trading tool, and you can see it from a survey that we took about a year ago, where the respondents in the U.S. had said that they are interested in crypto and view it positively, and that was 70% of the respondents in the U.S., whereas it was the opposite in Japan. So 70% of the respondents had a bit more of a negative view. And that was based on their experience in the previous cycle of losing money in 2017-18. And so they hadn't really recovered from it. So Japan tends to have these huge booms. The stock market, obviously, in 89, and in real estate in 92, peaking respectively. And then post the bubble deflating, that the scars from that last a very long time. And I'd argue real estate, and the stock market took a very long time and still trying to recover from that. Crypto, again, the people traded a lot in 2017, and a lot of people lost money and still trying to recover from that. So it's as a trading and investing experience, it hasn't been very good, unfortunately. But I do think that, because it's a huge savings pool in Japan, obviously one of the biggest in the world, that if that market ever, if that retail investor ever decides that they need to move from something outside fiat cash into something else, the scale of that dollar amount is just enormous, and will move the entire world again. So.
Yeah, you mentioned inflation. Obviously, the last few months, we've seen commodities prices, especially energy, absolutely ripping. If we look at a 2-year chart on dollar yen, for example, you can see this rolling up from the beginning of 2021 at about 103 up to where we are today, around 115. Obviously, this dollar yen chart shows dollar strength, yen weakness as it rises. Give us a sense of that broader macroeconomic context with regard to the commodities complex and also to the currency regime.
Sure. So let's see. Dollar yen, I kind of view is obviously there's the capital flows, and then there is the fear gauge as well. So in general, there is the idea that the fear gauge notion is that every time there's risk heightened risk in the world, the yen tends to strengthen. And the view, whether real or perceived, is that it's driven by repatriation. Obviously, the Japanese are one of the biggest sort of providers of the capital globally, and that repatriation causes a huge surge in the yen. There's the general flows, which I think have shifted over time, but nonetheless, I feel that they're a lot more neutral. So, it's much cleaner today than I think ever before. Is that, and what's really noticeable this time around is that in these times of fear, the yen hasn't strengthened a lot more. And really, I would have expected dollar yen to be sub 110, given all the concerns that we have, both in Russia, Ukraine, as well as, for example, NASDAQ and the general just equity sell-off. Historically, I would have argued and taken the view that it would have weakened. But something has changed, and I think the currency markets and dollar yen. And so the yen is playing a smaller role, the dollar is playing a bigger role. Maybe a simple way of putting it is that narrative is overcoming one of the biggest sort of currency crosses. I think your other question was based on commodities. Obviously, Japan has no energy on its own, so it's got to import. So, oil being, the rise in oil, this tight supply demand, I think that's going to be something which is going to affect Japan, disproportionately. You'd think that Japan is going to see with a weakening currency or a flat currency, the gasoline prices, which are obviously sensitive in every part of the world, and also affect inflation expectations quite a bit. I do think that this time around, if the yen doesn't strengthen, people will feel the hit a lot more than they historically have. And if that's the trigger to really get inflation expectations higher in this country, it's a massive shift from anything we've seen in the last couple of decades. I've been here, and working in finance for 25 years. And, there's always this whole, let's short the JGB, inflation, or there's too much debt, like all these things that have been talked about in the West in the last maybe 5-10 years. Maybe Japan has a long history of trying to fade that trend. And that turning point, I think, is going to be faster in the rest of the world. But if it hits this country, I think the amount of capital and the capital flows and the shifts that occur and the implications it has for the rest of the world, I think are going to be very big. The Japanese investor base is still, whether it's the Government Pension Investment Fund, the GPIF, the Agricultural Cooperative, or any of these institutions, anyone in the markets who trades, fixed income, credit, et cetera, knows that the Japanese still play a very big role in some of the biggest markets. Obviously, fixed income and credit being the two biggest.
If we were to see some of those changes, what might they look like in terms of the yen and in terms of other capital market prices?
The biggest thing I'm looking out for in Japan is if you finally see capital flight, right? The Japanese are interesting in my mind is that when the earthquake happened in 2011, and anytime you see natural disasters in certain countries, and you saw, the Fukushima, there was a lot of people that left the country. But, a lot of the Japanese just said, listen, we're Japanese, if something happens, it happens, right? But we're not leaving, right? We don't abandon our country. And arguably the capital market too. So you don't see the type of capital flight that you might see in other countries, or even personal flight, people leaving for personal safety reasons. And I found that really odd, being someone growing up in the U.S. is, don't you think there's no need for the allegiance, if you will, but it's there. And so that's one reason why I find that the whole trade that of higher rates in Japan hasn't worked is because there's no capital flight out of Japan, right? So the money stays in the domestic system, and therefore, no matter how much debt you accumulate, there's so many assets that it offsets each other, and so you just don't see that. If that changes, if people start moving their savings into something else outside of what effectively become fixed income through the financial system, then that's going to cause the currency, especially if it's going outward. And it's been happening, right? The Government Pension Investment Fund, which was mainly domestic bonds, has over time shifted to foreign equities, foreign bonds in a fairly major way. But if that happens on a retail level and the retail try to get their money out of this country, it's going to be a tidal wave. It's just I think people have looked at markets long enough to know how big it is in Japan. It just hasn't happened. But the day that pile of sand collapses, it's going to be something to see, something to watch. It's incredible. To answer your question, what are the implications of it? So the yen would weaken, would be my view, right? Is that you'd have capital flight into something else that's probably most likely dollar based. So dollar yen would, significantly weaken.
Where might it go? What might that look like in terms of price action?
There was a period when, it started to go into U.S. equities, right? So, I think right now, like, I'm surprised that the yen hasn't strengthened more because, I would expect a pullback from U.S. tech stocks. For example, I think one thing in the near term is if you start to see, and this probably goes in the opposite direction of what your question was, but if NASDAQ falls any further and the Japanese decide to pull out of U.S. tech, I think that will have implications for dollar yen, i.e. the yen would strengthen, the dollar would weaken in a major way. And it would actually affect some of the tech stocks itself. And they've been investing towards the peak of the cycle, unfortunately, in a major way. But to answer your question about where could that capital go in a capital flight scenario, one, I think, is gold. And so I think if the Japanese were to try to put some meaningful amount of their assets into gold, I think that would be enormous. I think into U.S. fixed income. So again, the whole notion that U.S. Treasuries would, yields would spike, I think a lot of Japanese would disagree. Is that if it hits a certain point, the U.S. obviously for geopolitical reasons, as well as financial reasons, I think will support the U.S. bond market in a major sell-off. They're already the biggest, but I think they could become even bigger. So the notion that no one will support, or the foreigners won't support the U.S. Bond market, I don't quite buy that. I think the Japanese will. It would take a lot for them to pull out of that.
Taka, one of the things that's fascinating to me, as people listen to this conversation, they hear you in Asia kind of at the center point of where the price action seems to be centered for digital assets. And here we are having this conversation about traditional capital markets and currency flows. It's fascinating to hear how you talk about this as a single endogenous system, how all of these things are tied together. For people who are relatively new to the capital markets macro side, make the connection between digital assets, between Bitcoin, and this conversation that we're having right now.
So Bitcoin as digital gold, for example, or as an asset to preserve value, or effectively, if you think of value as something that accumulates through hard work, right? You're trying to basically make sure that all the hard work that you've done is preserved. People have different ways of doing it, and the yen has been a pretty decent store of value. But I do think of okay, so let's take a step back. Of the major asset classes, you have obviously equities, bonds, you have currencies or fiat currency, commodities, real estate. But now you've added cryptocurrency to the menu of things that people can put their money into. And so and usually there's an allocation. So you expect to diversify those assets. A country like Japan, which has an enormous amount of assets, it's almost all in one bucket. I mean, if you looked at the stats of Japan relative to the US and Europe, and the asset allocation, I mean, I don't know if people in the Western world realize how much of the biggest pool of individual assets is sitting in fiat currency. But it has been the right trade. And the reason for that is Japan's one of the few places in the world that has had deflation. So again, people talk about deflation, and I think really, but I'm not sure that people really know what deflation is. And being growing up in the West and coming to Japan, I had no idea until really one statement that someone made to me, which is, and this was in reference to real estate and buying a house, why would I pay more for something that's been used more? It makes no sense. And I was like, wait, but in Japan, because there's been deflation, right? Any asset take a car, right? And happens a lot in Japan. A new car versus a used, if the second it moves out of the lot, the price drops massively. You 10, 20, 30% drop in the price as soon as it's quote unquote used. Right? So Japan has this whole notion of brand new versus used. And the more it's used, the more the value should go lower. Right? So again, an asset that is such as a house, the longer it's in existence, the less value it should have. Right? And the notion that you'd pay more for it, you're speculating that the next person is going to buy it for a higher price. But I also think there's a notion of abundance versus scarcity, which again, Japan is a country, for all the issues we talk about with debt, it's a very stable place with and things are fairly abundant. You don't run into scarcity issues here, and so I think that idea is really plays into the whole deflationary mentality. Once you have abundance and you have stability, right, then over time, if there's no speculation, then prices tend to sort of roll down the curve downward. And that's how I feel like deflation works. And the money printing hasn't worked in Japan. So really, I find it, pushing on a string, I think is the term that's used.
One of the things that I hope to get out of this conversation is exactly what you're doing, which is to explain the worldview in Asia, which is very different from the way that Americans see the world. I think this is incredibly valuable.
It's a very different mentality, and it's really, and especially Japan. Japan is just, and the one day that Japan changes, I feel like the world is going to change. But I also feel like, a lot of problems that Japan faces, i.e. debt demographics and, are the two biggest ones really, is something the world is going to face. And Japan's at the front end of that train. Hopefully it's not a train wreck. But at the same time, the reasons why things happen or don't happen, I think if you look at Japan, are a pretty good example, right? So the U.S. whole thing, and this is obviously a big debate, are rates going to go higher in the U.S.? This has been a debate in Japan for the last 20 years, right? Too much debt should lead to higher. Well, no, it doesn't, like I said, until this capital flight. But inflation changes that dynamic, right? And also trust in your currency. And this is something I looked into 20 years ago to try to understand the future direction of Japan. Until you lose trust in the currency, there's no real capital flight. And that's the biggest change in the world right now, is that people are finally, and it's not a good thing, but finally questioning the various fiat currency regimes. And obviously that is something that's going to drive crypto adoption in a way that was probably the world wasn't ready for 10 years ago. Again, the timing of the growth in the crypto market doesn't surprise me, as the trust in the fiat regime is declining.
Where would dollar yen have to go before Japanese citizens started to feel like cryptocurrency was sort of a potential hedge against significant currency devaluation?
So if you take a step back, the currency is traded, in my mind, between, call it 80 and 120, right? In the big picture, 100. So we can keep it very simple, and there's different sort of rear models or real effective exchange rates or, purchasing power parity. And, there's different ways to kind of frame it. But let's say fair value is give or take 100-ish, right? Is what I've read is often the case. Then, below that, and the currency has gotten below 80 to 76 or something at the peak strength. And at the upper end, though, it has gone further higher than that, because our starting point in the 80s was, 300 something, right? So again, over time, now, when you think of it that way, if I saw dollar yen go through 120, 125, something's really changed. Right. And so the previous sort of, Plaza Accord, and there's various moments in history where, again, it doesn't move, and all of a sudden it just moves. Right. And I think that level is, call it 125 in dollar yen. If we go through there, then you're probably talking, 140s. in the currency, and that's going to definitely cause people to question what's going on and what do I need to do. But within that range, I don't think that you have the everyday Japanese really panicking or being concerned about what's happening with the value of their fiat currency.
Taka, one of the subjects that comes up quite frequently, in fact, it came up today as we record here on Wednesday, March 9th, 2022, the executive order that President Biden has just signed, lots of references to CBDCs, central bank digital currencies. What are your thoughts around digital assets more generally, and then the relationship, for example, to independent digital currencies like Bitcoin and CBDCs, central bank digital currencies?
I think one of the most important things that's happening right now is that the U.S. implementing travel rule will, I think, start to create and draw lines and start creating circles. And I think VASP, virtual asset service providers.
By the way, for people who may not know, if you could explain the travel rule.
In a nutshell, it's a requirement to exchange information on the senders and receivers. Is the simple way to put it, and it's really about ensuring there's an AML anti-money laundering, know your client KYC component to a lot of this. But in reality, again, it's having a firm grasp of the movements of capital and value through crypto. But our ability, for example, as an exchange to interact with other virtual asset service providers is going to be premised on our ability to transact as well as our ability to exchange information on the users. And so with that, we may be able to trade with certain exchanges, but we may need to start cutting off other exchanges and not be able to interact with them if they can't comply with these rules. And so I think this is one major step towards creating the regulated versus the unregulated world and drawing a very strong distinction between the two and creating, I wouldn't say a wall, because there's maybe ways for people to get around it. But for the regulated world, it will become much harder to interact with the unregulated world. And in Asia, that will make a big difference because there are questions as to whether certain large exchanges will be able to get into the circle or be cut off from it. So really, I think the lines around which are the regulated versus unregulated VASP is being created. I think then that leads to which wallets are in the regulated or unregulated. And in which jurisdictions, that's obviously being clarified today with what's going on with Russia. So which jurisdictions and individuals are on which side of that wall? I think the last step, I don't know if this will happen, but I think most of the other things are going to happen, is that there's going to be walls created along those lines. Are the coins themselves, are certain coins going to be viewed and treated differently if they are viewed to have been tainted, if you will? So I think this will have huge implications on the way cryptocurrency is handled going forward and how it can and cannot be used. And I bring that up initially because against that, you're going to have central bank digital currencies, which are going to be very clean and going to be very usable, versus cryptocurrency, where there's going to be much bigger restraints being put on and the movements being controlled. And, these days I'm spending a lot of time dealing with a lot of these issues and the problems. I do think that people underestimate a bit, if you are not working in this world, how far the governments of the world are going to try to control the flow of capital through cryptocurrency.
Extremely well said. And I think that's very much an open question, and it's going to be fascinating to see how that shakes out. Taka, we've had a sort of broad and wide-ranging conversation here today. Final thoughts, key takeaways for our viewers, particularly in regard to understanding how these markets look from Asia. As we said, we were talking a little bit off camera about this, just a very different perspective on that world. Final thoughts on those differences?
Asset markets in Asia have, I think, in my personal view, been a bit more speculative in nature. They've been much more leveraged and much more volatile. The trading volumes are immense and driven by again leverage speculation a bit more than by investing sort of needs, if you will. I think that's changing, but that still hasn't made a full transition. Whereas I think the Western markets are starting the other way around. So they're starting with a notion of safety, a digital gold, a alternative currency, and then building out through DeFi and other means the other components of traditional finance. Adding leverage or adding sort of yield. And so on. It's going the other way around, and I think that's there's a stark difference in how these markets have started and developed. But in the end, I do feel like it'll be a mix of the two in a way that's very reminiscent of traditional finance.
Takaaki Kato, a great conversation. Really interesting to hear about digital asset markets from the Asian perspective. Thank you for joining us.
No, thank you very much, Ash, for having me. I enjoyed the conversation, and hopefully we can do this again.
Thanks for watching, everyone.
Hey there, visionaries. Your free membership to Real Vision Crypto, the world's premier source for cryptocurrency and digital asset analysis, is available right now at realvision.com/crypto.